Hello friends, welcome to another video of TradeLikeFxmakk. In this video we are going to talk about the confluences of the TTS strategy. So TTS is basically my trading strategy. I am already making a series on it. You can check the playlist. Now understanding, I have already taught you about the market structure and about some basics. Now this video will consist of all the confluences which I check before entering a trade. The next video will include a get together of everything, like a process. How do I see it as a process? And the final video would include the entry model, the entry confirmation which I use to enter my trades now. Okay, so that was the total summary of 3 more upcoming videos which are going to come on the TTS playlist, beginning with the confluences of the TTS strategy. So without wasting time, let's directly move on to the chart. Now first of all, what do I mean by confluences? Confluences means confirmations. Basically confluences are the confirmations which I look for. So the first of all confirmation which I look for is the trend. So after this I look for trend. Let's just decrease the size. Okay, trend. Now you know that my way of identifying trend and of trend slash candle reading. I have already created a video on market structure where I have explained this in detail, so I would not go into depths again. You know that my ways are different rather than seeing the hardcore structure which many of you do. So my way is a little bit different. I have created an entire video on market structure. You can check that out. Now for example, the first thing which I see over here is the trend on the weekly time frame and the previous candle on the weekly time frame, which I include in candle reading. Then we go to the daily time frame. The daily time frame, we look for previous candles and the trend. Now here you see a super bearish move and the trend very well. Of course, now here many people would look for buys. Why? Because we are bullish in the structure over here. But what I am looking for is I am looking for sells, because I do not want to see the data over here. I do not want to see what has happened in April, at the start of April, because right now we are in May, in mid of May, so we are almost 1.5 months away. The data what has happened over here would not affect something over here, so that is very important. Sometimes you have to consider the structure. Like for example, in this case, if you are looking for buys from this level, okay, then it would be a very good thing to consider the structure point. But what I am saying is, right now you can see the weekly time frame has the super bearish engulfing candle. The weekly time frame has a bearish structure also. At that given case, see, the higher the time frame, the more the priority. That given case, I would not consider this. I would consider this recent candle moves on this structure. So what I would be looking for is a retest over here to then sell further. Now this is how I analyzed my weekly and daily in front of you. The next thing what I do is I go to the 4-hour time frame to check how the trend is and what the move says, what my area of interest says. Is my area of interest strong enough on the 4-hour? Can I include more points or something on it? More points means more touches. Now for example, you say that I want to include this touch over here. Okay, so this would include this and this 2 more touches. But is it required? It is not required, because already our area of interest is up. So see, and I'll show you a concept. Now see, if this was our area of interest and we went short over here, we would get entries over here. Okay, at the same time, if this was our area of interest and we went short here, we would have got entries here with a tighter stop loss. So at selling moments, if the area of interest consists of, like, see, if these were some major points over here, like if these were major points on the daily time frame, let's mark it over here. If these are major points on the daily time frame, we would consider it, but these are just like wicks on the daily time frame. So if it retests till the body level, that would be far more stronger than if it retests till the wick. So that is one thing that you have to consider on the 4-hour time frame. Like the 4-hour is just for confirming your area of interest, confirming the trend and everything, and waiting to see that till where a particular retest can come. So this I feel is a strong enough zone. Also you can see that this has a very good chances of retesting this zone because we have Fibonacci levels. This is a very good level over here. This lies between the 50 and 60%, which I call the golden zone. I call the 50 to 60% the golden zone. This is my extra confirmation of Fibonacci level. I don't use it on a regular basis. I just use Fibonacci tools when I want an extra confirmation, when the trade is not strong enough and I feel that I need an extra confirmation. So aligning up the Fibonacci on the 4-hour is an extra confirmation for me. I also use it sometimes on the daily and weekly, but more over I use it on the 4-hour, and I use wicks. I use wicks to see the entire move. Now you can see that the 50 and 60% zone aligns with it. So this is a strong enough zone. You don't need to include these two structure points, because what can happen during sells, if you include this structure point, it can retest here, give you an entry, go a little up, hit your stop loss and then fall again. So that is why in selling, if you are getting a zone something like this, like a strong enough zone on the daily, and you do not want to include these 2 points which are below, it is okay. And same vice versa for buying. If this is a zone, okay, first if this is a zone and you want to include, like, let's say this point for buying, let's say this point over here for buying, you can make this zone, but the same thing, it can come here, it can hit your stop losses and then go up again. So rather I'd keep the zone smaller and downer, because if it retests deeper, it is a better opportunity for us to buy. Like, we are getting on a better price, right, at a more discounted price than usual. So that is how I analyze trend. Now this is very important. This, I took so much of time explaining you this, because this is the whole game here. Once you understand all this, once you have the AOIs proper, I have a video on how to draw AOI also dedicatedly. That is very important. This area over here is our AOI, which is the area of interest, where we look for potential trades. So that is the first confluence. Now next confluences with this is the head and shoulders. Okay, the next confluences is the head and shoulders pattern. Now you'll find this on multiple time frames. You have to start looking at with the daily time frame. Here you can see we are having a potential head and shoulders on the daily. Okay, we are having a potential head and shoulders right here. See, and this is the right shoulder. Okay, a potential head and shoulders. We have not yet confirmed the head and shoulders, but this daily engulfing, weekly engulfing candle looks superb. So that is the reason we were looking for sales. We have closed below all the wicks also. The daily examples of head and shoulders and inverted head and shoulders. Okay, yeah, here you go, an example of inverted head and shoulders. Break, retest, and then we go up. So this is how I use my head and shoulders. Like, it is just an extra confirmation. It does not matter, it does not affect my trade in any ways. Here you can see a very nice, beautiful head and shoulders pattern. See this why do we use head and shoulders? Because, see, understand the reasoning behind it. Because when we draw a head and shoulders, what is actually happening is we are shifting the structure. See, this was normal bullish momentum until here. If you see, let's just hide this much. Okay, now you see this much is just normal bullish momentum. We were going up, then suddenly what happened? We closed below this. Okay, even if not below this, it's fine. What happened after we came here? We had to attempt this high to continue the bullish move, but we did not. We shifted the structure and we went for sales. Now sometimes head and shoulders can be very risky. If you do not consider it at the correct zones, what can happen is that your stop loss would be hunt, like this level out here. This level would be hunt, and then we would again see the push upside. Okay, so that is why, like, this is just an extra confluence head and shoulders pattern. I also trade the double bottom and the double top pattern, because these are all shift of structure patterns, because these are changing structure. These are telling me that a move is in the current direction where we are. So that is one of the reasons. Also, moreover, many people love to use EMAs. I personally do not use EMAs so much, but yeah, you can have this EMA on the chart. What I use is I use a 50 EMA. So this is it. You can have the EMA on a chart. It's an extra confirmation where you are entering a trade or something, see, this is for the confirmation. So you tap onto the smaller time frames. Now near the 1 hour, you can see that the EMA is almost near the price. This will give me a very nice entry because the EMA acts as a dynamic support and resistance. So it is a moving support and resistance basically. You can check it on the weekly and the daily also while you enter. See, like for, and one more thing is that usually you see that price tends to touch EMA after a certain amount of time. Like the most EMAs are what? Exponential moving averages. What do they say? The average price. That is it. The exponential average price means the current candles, the recent candles are giving more value than the previous candles. That's it. That's what exponential moving average says. So see, like this, if you're using an indicator also, you should know everything behind it. It should not be that, okay, there is a line over here, it's moving, that is my support and resistance. No, that is what influencers teach you, because they themselves don't know what is happening behind it. So this is a dynamic support and resistance. Now what we are seeing, this can be a potential retest till this EMA. So what we can do is we can keep our take profits at the EMA, at the weekly EMA level. Okay, now here you can see the daily EMA is up, which is a plus point for us, that if we get the retest, the EMA is almost going to be near the candle, and then we can look for sells further. So EMAs, I am not a very big fan of EMAs, but yeah, you can have it as an extra confluence. Now one of my favorite confluences is the rejection and engulfing candles. Wait, now what do I mean? See, this I would consider as the one of the most best rejection candles ever. This is such a superb candle. Like, there was no chance to not go sell on this candle if you had a proper AOI and a proper trading plan, because this is what rejection candle is. It is simply rejected. It is rejected. And what is an engulfing candle? Engulfing something like this one, this recent one which we have. This is a superb engulfing candle. This is engulfing last 1 2 3 4 and half of this also, almost 4.5 weeks. So that shows strength. That shows that sellers had strength this week. So probably we are going to continue sells next week. Now this is how you analyze it on the smaller time frames. This, my friends, which I taught you right now. Wait, apart from this, let's first type everything down. We had head and shoulders and other patterns and others. We had EMA and the next thing. Now see, keeping it simple is it is the key. Keeping it simple is the key. Okay, yeah, one more thing we missed out, I'll just write it over here, is the AOI, area of interest, the area of interest which we drew over here. Now after this 4 things, we also had this rejection and engulfing candles. Okay, now after this part over here, the rejection and engulfing candles, this is very important because this is my base foundation for my entry confluence. So the entry depends very much on rejection and engulfing candles, very much, like very much. It is on the smaller time frames, but the entry majorly, see, now I have changed my focus from shift of structures to rejection and engulfing candles for entries. I have changed, I'll repeat once again, I have changed my views from shift of structure to rejection and engulfing candles from my entry confluences. I am going to make a detailed video on entry confluence also, don't worry. This was just a run up of all the confluences which I majorly check. So I check the trend, I do the candle reading. Candle reading is one of the main keys of my strategy. Even if you remove trend, it is very much okay for me. It is okay if the daily and the weekly say bullish trend, but I am looking for a bearish in such scenarios. It is very much okay for me. If the weekly was bullish also over here, I would have still looked for sells only. So that is it. The candle reading part is very important for me. That is the core foundation of my strategy. Okay, rest talking about EMA, and then one confirmation which I have is liquidity levels. Now what comes under liquidity levels? Okay, So these consist of simple wick levels. Yes, wick levels. These wick levels over here. Now this was a superb setup, because see, we have so many liquidity levels. We have one over here, and we have so many stacked up somewhere over here. Like we can see that almost this candle is low, almost this candle, almost this candle. So many lows we have stacked up on the weekly time frame. Now going on to the daily to draw the proper liquidity levels. Okay, wait. So I just remove the EMA for the clear view. Now see, we knew that weekly has many liquidity levels here. Now where to find those on the daily time frame? You can clearly see that we have one level over here. Okay, and another level which you can draw is, you can draw over here using this one, because this, we have this also, we have almost have this also, and we almost have this also. You might take it a little bit. Yeah, we now have this one also, this liquidity level also, this level. Now most probably what I would wait for is these levels to get hunt before I enter. You can also mark these levels on the 4 hour if you have a very clean like see this, for example, if we did not have this level, this would have been a very clean liquidity level on 4 hour. Okay, so first I would wait for these liquidities to get hunt, because after these liquidity gets hunt, then only we can see big moves. Because when big players place orders, they cannot place randomly anywhere on the charts. They need to have that much of orders, they need to have that much of liquidity pool. So that is the reason this is one of my core foundation. And one more thing which consists in liquidity is around psychological levels. Okay, for example, 1700 is around psychological level. You can say 16500 is around psychological level. For example, these are around psychological levels. 16750 is around psychological level. See, 16750 is around psychological level over here. So that is how it works. That is how it, these are the confluences. Now let me add liquidity levels plus around cycle. Okay, fair enough. Now this is one of the most simplest checklists, like just 6 to 7 points which you have to look for, and you are prepared for the trade. Like this is what exactly I see. This is exactly what I see, and I don't see majority of these points also. Like for example, the EMAs. Okay, we just missed one more point over here, the Fibonacci. Okay, so now it is not that if I take a trade I'll see all of these 7. As I told you, my main structure depends on this trend and candle reading. If that shows me the correct thing and my AOI, then I would go 1 point ahead. See, wait, I'll just mark it correctly for you according to the priority. Wait, now this is the priority level. Okay, just ignore the numbering, guys. Wait, I'll just renumber for you. Okay, now see, this is, oh my god, wait, I'm really sorry guys for the inconvenience, but liquidity levels also come up for me. Like these are also a very important confluence to me, liquidity levels. Okay, I'm not renumbering it again, guys. You understand with the order over here. The first and the foremost most important thing which I give priority to is my trend. Okay, my trend, and moreover what, the candle reading. More than trend, what, the candle reading. The candle reading is what I prioritize. Okay, the next second point is we'll look at the AOI. Okay, after looking at the AOI, third we'll look for the rejection and engulfing on the bigger time frames, the daily, weekly. Okay, right now we are not looking for the entry confluence rejection and engulfing. We are looking for the trade plan. Okay, then next I would check my liquidity levels. See, liquidity levels is a very must to me. If these levels are not hunt, I would not enter my trade, because these levels literally show me order. Like see, for example, over here in this case only itself, these levels literally show me orders. These are so many lying orders. I would just mark a small zone also over here, and then on the daily we can go and draw liquidity levels inside the zone. See, as you can see, this is it. So one of the liquidity level lies over here at the end of the zone, and one of the liquidity level is, I'll draw it over here as we had it before on the top. Now see, if this does not get hunt, okay, what if price comes till here and goes? Fair enough, that's not my trade, that's not how I trade. That is it. It's okay. It's okay to miss a trade. I want the retest of the area of interest and alongside the hunt of these levels. Now see, this in this case we had these levels down. Now what if sometimes you have a liquidity level, for example, just for let me see if I can find one. Okay, no. So rather than forcing it, just imagine that we have some liquidity level over here. Okay, just imagine, we actually do not have any liquidity level, but just imagine, okay, for now. Now what if we retest over here and we give our entry confluence? Now what? Out of 100, 80 times I would avoid this trade because my liquidity level has not been hunted. It is very important for me, and majority of the times what will happen in this case is it will struggle a little bit, or it will show some of the selling, and then it will again come to hunt this liquidity zone to then show sharper selling. This is what majority times I have seen. So that is how I plan my trades. This is how I run my exact execution. Like guys, I have shown you my exact execution. Whatever I see, I have shown you in that way only. See, this all I can only teach you with experience, because I know I have done it. I know what confluences out of these 7 are important, what are not. See, these 3 confluences, if I don't get, I'm still fine for it, and I do not even look for it. Like I do not open a chart graciously and I just see for head and shoulders over there. No, if these 4 align, then I will see. If these 3 are there, then well and good. It's a more stronger trade, a more stronger setup. But if those 3 are not there, I'm still okay with it. It's fine. It's just okay. It's not a big deal. So that is how it should be, guys. That's how you should stay. See, the head and shoulders, the EMA and the Fibonacci are not that important. Those are added confluence. The top 4 one, which is the trend, especially the candle reading inside the trend, the area of interest, the rejection and engulfing, and liquidity levels. These 4 are the most important confluences. Now remember these confluences. Next video we are going to have is a trade plan or something. I'll share with you guys, putting all these confluences into play and having a proper entry. Okay, then in the third preceding video after this, we will talk about the entry confluences. We'll see how we took the trade in the previous video, okay, and what was the outcome of the trade, how did it come out to be and everything. So like it would be an after trade only, that after I take a trade I'll be making a video. So we'll just break down the entry confluences and we'll see how everything plays together, how everything combines together. Guys, this is paid level knowledge that influencers and trading gurus sell you courses in, and still they do not know the depths of all these. Why? Because it is still not working for them also. It is like, even if it is working from them, they have so many sources of income that they do not even need to rely on trading. It is, how can I explain you that this knowledge is what you're getting for free. It's worth millions of dollars. I have paid a lot of price to learn each and everything on such details. I have paid money, I have lost trade, I have learned, I have sacrificed my time, and after that I am able to explain you each and every point in proper depth. So these are also not the very much depths as we should go. So of course we cannot cover everything in one video, but this is actually the overviews of how my strategy works and how I look at the confluences. So that's it for the video, guys. We have already made the video too long, so thank you. And if you wish to view my analysis and other loads of knowledge which I do not share on YouTube, because see, I cannot make videos on YouTube on a daily basis due to my schedule. So instead you can join my Telegram channel. I share loads of knowledge, trade updates, live trades over there, and indeed the Telegram channel is going very well. Like you can see, if you want to see that if I am profitable or not, you can see my Telegram channel. I have not shared a single PNL from the beginning, and I would never share my PNL also. But if someone has the guts to tell you that what is going to happen next, show you the entry, show you with the proper logic, then why would he not take a trade himself? All the trades are shown beforehand in my Telegram channel, analyzed on weekends, and we are prepared for the trade. So that's all for today. If you wish to join my Telegram channel, the link is in the description and the pinned comments. Thank you for watching the video. FX Mac on the site.